up, guys? It's me again from Miss Peters, and I'm here with another mind-blowing episode of Theoretics Effects. And before going forward, even though we all know it, we're already we're already in the month already. I want to use this opportunity to wish you guys a happy new month. And this month is going to be filled with so much positivity and prosperity. So guys, in our last episode, we discussed about the advantages and the disadvantages of you being a Forex trader, the advantages and disadvantages of foreign exchange. And I hope you guys have streamed that video and you find it interesting and educative. So guys, in today's episode, we'll be discussing about the participant in the foreign exchange market. That is who are in the Forex market and how they impact the foreign exchange market. So guys, stay tuned. Let's go through this episode together as we always do. Stay tuned. Speaking about participants in the foreign exchange market, firstly we have the banks, that is the central bank. And I want you guys to know that the central banks are there in the market to control the market. They are seen as the big players in the foreign exchange market. They are just there to control. That's why if you are used to the charts, most times you see a spike movement in price, like just a shoot up or a shoot down in price. Those movements are being done by the big players in the foreign exchange market, and the central banks do those things through policies, monetary policies, interest rates, and various other policies that they introduce into the particular country's economy. All these things are done to stable the country's economy against other countries' economy. So that is for the banks. And it will be very important for you to know that the key central banks in the foreign exchange markets are the European Central Banks, the Bank of England, and then the Federal Reserve of the United States of America. Number 2 on my list, we have speculators. Speculators are different from every other participant. Remember, I said earlier on that some participants are there in the forex market to control the market price movement, while some are there to make profit. Speculators are hedge funds, prop firms, and the retail traders. That is you and I. And we are there to make profit from little price movement, the volatility of countries' currency, and all that. So speculators are different from other participants because they are actually there to make profit from little movement of price, volatility of countries' currency, and all that. Thirdly, we have the brokers. I've spoken about brokers in my previous video, and if you want to know more about broker, you can go stream my previous video, or you ask questions on the comment section about a broker or any other thing you want me to discuss in our comment video, and I will be glad to give you better explanation about that. So going forward, a broker is someone that stands in between you and I as retail traders and the market. Not until the 1990s, the forex market was actually made for the big guys, those with the large funds. We're talking about millions of dollars. So with the introduction of the broker, it has been easy. It has been an easy feezy for we can stay in our home in our pajamas, wake up in the morning, switch on your laptop, and then you're in the market just because of a broker. Because it has breached a very, very big gap between we as retail traders and then the market. So the broker gives leverage. The broker takes your order. The broker takes your order to the market and then gives you if you make profit and all that. So the broker is a very, very important section of the foreign exchange market. So it stands in between the retail trader and the market. I hope you find that explanation about a broker and speculator interesting and educative. So guys, if you have followed up with this video up to this moment, that means you find it interesting, and I'm very, very glad. Why don't we take part, as we always do, by educating other people out there and you can take part in that activity by you sharing this video to your people you know it could be of interest to, liking this video, and also subscribing to this YouTube channel so that when I drop episodes by episodes like this, you will be notified about it. So guys, going forward, we'll talk about the fourth participant of in the forex market, that is the electronic liquidity providers. We call them the ELPs. Stay tuned, guys. The ELPs differs from the normal liquidity providers like the banks, and they also differs from the hedge funds, the prop firm. Some examples of the ELPs are Citadel Securities. We have flow traders. We have jump trading. Very many of them, and their major role in the foreign exchange market is to ensure that participants in the forex market find counterparties. A counterparty is actually the other side of the trade. If there's a buyer, there should be someone willing to sell, and if there's a seller, there is someone willing to buy. That is, a counterparty is when there is a buyer and it's a seller, vice versa. Lastly, on today's episode, we'll talk about the large commercial companies, and that is the last point I'll be giving on participants in the foreign exchange market. Examples of the large commercial companies include Apple, Toyota, the JP Morgans, and very many other large commercial companies. And transaction by such commercial companies can lead to a shift in the foreign exchange market. That is, for instance, these companies want to go into any transaction. Very clear, it will involve millions of dollars, probably billions of dollars, because these are large companies. So these companies are actually there in the foreign exchange market to control the market through their transactions. For instance, Apple wants to buy instrument from Japan, let's say Japan. Apple will need to convert US dollars to Japanese yen for them to complete that transaction. That simple action of converting from the US dollars to the Japanese yen will lead to a spike of the Japanese economy, thereby making the currency to be stronger, thereby affecting the foreign exchange market. For instance, you are trading any currency against Japanese yen. I believe you know what to do as a trader at that moment. So those companies come into the foreign exchange market, make transactions that causes big shift in the foreign exchange market, thereby controlling the price movement, controlling the volatility of price. I hope you find this explanation clear and educative. That will be all for today, guys, concerning the participants in the foreign exchange market. Let's all do this together. You know how we do it, guys. It's all about educating other people by you as you're streaming, sharing this video, liking and subscribing to this channel so you get notified whenever we drop episode by episode. Comment below any question concerning investment, concerning foreign exchange you want me to address, and I'll be there for you always, as I am always available for you guys. Thank you and stay blessed.